Hi, Corey Litzenberger here with CGL Strategic Business and Tax Advisors, online at www.cgltax.ca, coming to you with our second installment of CGL's video tax tips. And this time we've decided to, here in December 2011, we've decided to talk a little bit about year-end personal tax planning that you can do. You know, as you're rushing and finishing your Christmas shopping, maybe give yourself a tax present by following some of these tips. So a variety of expenses can be claimed as tax deductions in the amount that if they're paid by the end of the year. So they actually have to be paid. And some of these things are interest expenses, investment counsel fees, safety deposit box fees, accounting fees, and professional dues. Likewise, certain outlays such as charitable donations, political contributions, children's sports and fitness programs costs, as well as the fine arts tax credit programs. And medical expenses that also give rise to tax credits must be paid in this year in order to get those types of deductions. If you're planning to be charitable this month, consider donating public company securities instead of cash that have an accrued gain in them. So if you planned on giving $3,000 this month anyway, maybe you give $3,000 worth of public securities that have a gain, say, of another $1,000 in there or whatever, so that they're only worth currently $3,000, but you paid, let's say, $2,000 for them. By doing that, you still get that $3,000 charitable tax receipt, but you don't have to pay any tax on the capital gain because there is a special provision that excludes if you donate the actual shares to a registered charity. And again, it's the actual shares, not just the cash. You can look at purchasing a tax shelter, but we strongly recommend you take a look at our previous video in regards to those types of things before getting involved in those types. You can sell some securities with some losses that are in there, so conversely, don't donate these to a charity. But if you have any capital gains this year or in the previous 3 years, or you plan on having some capital gains in the near future, look at selling some of these ones to trigger that loss on those shares to use against those gains. And if you do plan on repurchasing those shares, you have to wait 30 days after the settlement date. And again, in order to recognize the loss, it must be settled by the end of the calendar year. So for most Canadian stock exchanges, that's usually around December 21st that you have to start the transaction, so that way it's settled by the end of December. Looking at long-term investments or mutual funds, sometimes you have to watch that some of these distributions from these investments happen early in December or happen in December, and so the price that you may be paying may be inflated because the distribution has not happened yet. You may want to look at checking into whether or not that distribution has occurred, or whether or not you want to basically purchase them right after the distribution, so that way you're not creating an interest income inclusion or a dividend income inclusion for something that really should have been capital in your purchase price to begin with. Corporation business owners should make decisions about their final remuneration from the company if they're looking at any sort of dividend, salary, or bonus that they want to get on their 2011 tax returns. They should consider paying out some dividends that may trigger out a refund in the company, especially if they can designate them as eligible dividends, which is a whole other topic for those corporate clients. We want to reduce some of your unincorporated business income. If you are filing a T1 with a business statement attached, you should look at making some capital purchases, such as computers, furniture, or other types of equipment that you may actually be needing or have been waiting on buying in the near future. Look at Boxing Day sales for some of these types of things if you plan on using them in business, because obviously in one situation, it reduces your cost, obviously, from an actual cash expense perception. But obviously, it still also happens that you get the expense in this calendar year, which helps you on your business statement, and you get that depreciation amount depending on what you buy. You will get it for the full 6 months value of the year, even though you're buying it right at the end of the year. Now, for those of you who are religiously keeping a travel log, and I know there's one or two out there of you, make sure you update that automobile travel log, and especially employees who use employer-provided cars for business, because you can reduce any potential employment benefit that your employer may be taxing you on for that company vehicle by providing them with a log of your personal, which is less than what the target amount is that's put in by the CRA. So if you don't use it very much for personal, make sure you track those mileage and have a very detailed log, because you could reduce the amount of tax you're paying on that type of thing. There are many other things that you can do to reduce your taxes. Obviously, RRSPs is one of them, and we look at that as a deferral vehicle as well as an asset protection vehicle. Keep in mind that the deadline this year is February 29th, 2012, not March 1st. It is 60 days from the end of the fiscal year, and since 2012 is a leap year, you have until February 29th to make those RRSP contributions. If you're not sure about how much to make or that type of thing, talk to your financial advisor or come in to see us, and we can do a quick estimate of what your taxes may look like when you have your last pay stubs and so on, because that's very good representation of what your T4 will look like, and we can get an idea as to how much you may need to contribute or what kind of refund you can expect if you do contribute. Again, I'm Corey Litzenberger with CGL Strategic Business and Tax Advisors, online at www.cgltax.ca. You can follow us on Facebook at facebook.com/CGLTax, or also on Twitter at twitter.com/CGLTax. We are at CGL Tax. Thank you very much, and we will talk to you again.